Hello world! This is the Impact Investing Show, where we invest in a future for all conscious creatures. I'm Leonard Shelter, welcome to the show. Thanks for tuning in again. Today we are going to talk about the VegTech ETF. It's an ETF that was set up just last year in December, so it's very young, and it invests in plant-based food innovation and technology. So especially we're going to look at if this fund is interesting for you as an investor interested in cellular agriculture, of course. We want to see some precision fermentation, some cultivated meat and so on. So let's see if this ETF is interesting if you're interested in this sector. And I can give you the short answer right now. It's no. You shouldn't invest if you're interested in cellular companies. There's not that many cellular companies that are publicly traded yet at all, so obviously this fund has no option to invest in them either. For the slightly longer answer or some detailed views into the actual holdings, and if this still might be an attractive buy for you if you're interested in plant-based innovation as well, we're going to look at some of the details of the fund now. Right here we have the investment thesis of the fund, so let's take a closer look at this document where they describe what they invest in, why they invest, and their main holdings. Here you can already see Oatly, they do their oat milk, obviously, very famous company, and Beyond Meat, you probably all know as well. Then we have Givaudan, very big company, Ingredion, quite large, and then some smaller companies around as well. So their investment thesis overview states they want to disrupt the global food supply system via plant-based innovation and alternative proteins. Sounds like just our cup of coffee. The problem: why and how the current food system negatively impacts climate change, wastes precious resources like land and water, and increases food insecurity. Dude, that's a tongue twister. Wastes precious resources. The solution: invest in plant-based products and innovation addressing these issues and improving human and animal health. That's nice. EATv offers exposure to the 4 fastest growing subcategories of plant-based innovations and alternative proteins: plant-based foods and beverages, synthetic biology, plant-based materials, and agtech. Profiles of companies in each subcategory are included. Let's check them out. Right here we have their 4 innovations again. Plant-based foods and beverages, obviously, but then we're most interested in synthetic biology. So here they name exactly what we want to hear. Precision fermentation is the creation of animal protein or animal fat from biosynthesis, building on age-old technology, fermentation for example, of turning plant sugars into alcohol. Yeast is programmed to produce animal products without the animals. True. And then of course we have cultivated meat, which takes animal cells and grows them in a controlled setting to create full cuts of meat without raising animals. Agtech includes water technologies, greenhouses, and vertical farms that produce food more efficiently and effectively. All nice and all, but I don't think this will be such a big disruption as cultivated meat and precision fermentation will bring about. Here in the fact sheet you can see the category weightings in visual form, so it's just 2% cash, Agtech, the small orange one here, then you have plant-based food and beverages, 65% here, the big green one. Synthetic biology, rather small, 10% here, and then plant-based materials here in green. Next up here we have the market size. So you can see that almost half or even more than half of the companies is small caps. Then you have mid caps and large caps. So you might think this is a really smaller ETF, so it's invested in smaller, more risky companies. But actually, this averages out to more mid-cap companies probably. So it's probably not as volatile as you might expect from such a small ETF. We'll see about that. So now let's get into the meat of what this ETF actually holds and what you buy when you buy it. So here on the website of the ETF now, you can see that the VegTech Plant-Based Innovation and Climate ETF is a pure play fund investing in alternative proteins and the food revolution. Pure play is always nice. There are some washed out versions of ETFs that have some like plant-based innovation and so on. But if this is a pure play, this is awesome. One important distinction to make here is probably that the VegTech company offers an index, the EATv, the EATv index, and the EATv ETF, which are not the same thing. They are related somehow, but the ETF is not tracking the EATv index, but it's actually an actively managed ETF, not related to the index. So these are 2 different things. So the VegTech Plant-Based Innovation and Climate ETF, EATv, is an actively managed fund designed to offer investors exposure to the growing plant-based foods and materials trend through VegTech companies. The VegTech ETF is a pure play in plant-based innovation, and we believe the only fund offering global exposure dedicated to this emerging sector. There are two interesting things here. First up, it's an actively managed fund. Now that's important because it's not simply tracking an index or anything. So with most ETFs, you would think it's a passively managed fund, but this is not the case here. So they have active managers, the Sasha Goodman, for example, who is actively managing the stocks inside this fund. So this is important to know. And secondly, they say that we believe the only fund offering global exposure dedicated to this emerging sector. That is definitely not true. I'm going to show you some other ETFs for the sector later on. One of these alternative ETFs to the EATv ETF would be from RIZE. So here on the website, you can see that RIZE offers future first ETFs. So let's see what that entails in terms of food innovation and alternative proteins. Under fonts right here, you can go to the RIZE Sustainable Future of Food UCITS ETF. Obviously, they have a marketing video here, which you can watch on your own time maybe. But it's actually using the exact same stock footage that the EATv video uses, so that's quite ridiculous. And their investment case is very similar. They say that the food system has a very large impact on our world and our environment specifically, and that they want to invest in smaller and upcoming companies that work on improving the current food system and providing innovations in food production and food sustainability. So it's very, very similar to the EATv investment case. They go on here about what the ETF holds for investors. So EATv may provide exposure to plant-based food and ingredient companies behind popular products such as the Beyond Burger. Beyond Meat is one of their portfolio companies, so this makes sense. Plant-based materials, as we talked about, which is nice. Plant-based agricultural technology, which is awesome. And then obviously most important and most interesting for us, alternative protein companies capable of transforming plant-based carbohydrates and other ingredients into proteins using precision fermentation, cell-based agriculture, and advanced technologies. This is obviously cellular agriculture at its finest. We're going to see what companies they actually hold. They hold Meatech, for example, Meatech 3D from Israel. But in terms of publicly funded companies, there are not really that many available, so this sector is still quite small in this ETF. Now let's talk some numbers here. So fund data and pricing. The net assets are $4.2 million, which is really tiny. $4 million for an ETF is almost nothing. That is very, very small. And we saw that their total expenditure ratio, you can see it down here, is 0.75%. So if you calculate that, you have a $4 million fund and you get 0.75%. That is what, like $30,000 a year or so that you get in fees from managing this fund. So I don't know how they run this. They cannot pay their people from this with this small asset size. So they will have to level up and collect a lot more money to make this a profitable business, this entire fund managing here. The NAV, net asset value, is at $16 with a closing price at $16.61. So there's pretty much no premium here. Net asset value is sort of their underlying true value sort of the investments. And then 16.61 is the price of the ETF. So there's no premium, which is understandable because it's publicly traded companies. This NAV and premium to the closing price is usually used for venture investments. So because these are publicly traded stocks, they have pretty fast price discovery and there is no big premium or discount that you pay when you just buy them in form of an ETF instead of just buying them directly on the stock exchange. Fund inception is interesting. So it says here December 21, so it's not even a year old. This whole entire ETF is very, very young, which is interesting. I mean, it's not necessarily bad, but obviously you have to see if this sticks around. They haven't proven themselves, so to say, yet, because it's such a young fund. It's traded on the New York Stock Exchange and ARCA, which is okay for Americans, I guess. For Europeans, it's a little complicated to buy them. On Swissquote, for example, you can buy them. But where I live in Germany, most of the brokers don't offer trading on the New York Stock Exchange. So it's very difficult for Europeans to buy this fund, I would say. Fund holdings, 43, is an okay number. Here we have some numbers on the returns. Obviously, these are horrible as everything was just spiraling down in the last month. Everywhere, the entire market was going down. So on the 3 month, we have minus 17%. Yeah, what can you do? That's probably more the macro environment than their stock picking. So you cannot really judge from this. Here they do some speculative hindsight, I would call it. They state here that as of May 2nd, 22, the last 12 months saw stellar growth for VegTech companies. The EATv ETF had a phenomenal 40% revenue growth rate average in its portfolio over 40 companies. Where yes and no, like hindsight is always easy. The ETF was not even established last year in May. It only started in December 21. So this is like speculative hindsight is what I call it. They just took their company thesis, their investment thesis, and projected it backwards. And then, yeah, you can get great numbers. But as I said, this is not really reliable. Don't trust on this. Another interesting point here. As industry experts, both Elizabeth and Sasha are keenly aware of the global venture capital investment growth in this space, up 60% in 2021, according to the Good Food Institute. And which companies are prime for IPO? That would be interesting. Please let us know if you do. And here you have them, the top 10 holdings of the ETF as of June 2022 now. So going through them, Ingredion, Givaudan, Elf Beauty, Amyris, Beyond Meat. They're not your household names, like Beyond Meat is probably known to most people here. But all these other companies, they're more or much more, they're pretty much purely B2B companies. So they supply ingredients, flavors, other food, beverages, ingredients, and so on. Elf Beauty, for example, they do makeup and stuff. And they are a B2B company as well. So they supply ingredients for makeup for other companies. So these are not the household names that you as a consumer directly know, except for Beyond Meat maybe. And there is none of the true like cellular agriculture companies in here. And you can see it goes down to just 4%. So if you're interested in a true cellular agriculture ETF, this is definitely not it. You can see their full holdings on the website here, which is very nice. It starts out with Ingredion with 10%, which we already know. But then we look for Beyond Meat and actually see that it is all the way down here by now with only 1.47% of the fund. In the other document, it was on spot 5 or something, I believe. So there's still some movement here, some turnover in the portfolio. Another interesting holding here is Tesla Inc. with 2.26%. And actually in a webinar, the CEO of the ETF, Elizabeth Alfano, explained this because they like that Tesla pushed their synthetic leather in all their cars. Car leather is actually quite a big consumer of leather, just next to fashion and shoes. So pushing car industry to use more synthetic leather in their cars is actually a big step. That's why she wanted to include Tesla, and probably because she knows that Tesla is a really good idea for the future, probably. No investment advice, of course, but Tesla is included in this pure play fund on alternative proteins and the food revolution. So much for a pure play fund. Anyway, I like that they have Tesla. I always like Tesla. And what do we have here? Right below Tesla. Agronomics Limited. That is awesome. If you don't know what Agronomics is, you've probably lived under a rock, I don't know. If you're interested in cellular agriculture and synthetic biology, I would argue personally that Agronomics is definitely your best chance at exposure to this sector. And I like that they have invested in Agronomics here. It's just 1.9% of the fund, but Agronomics is a true pure play synthetic biology, cellular agriculture investment vehicle. So I'm really glad they included this in here. Awesome to see. Cash and other, almost 2%, which is fine. Beyond Meat down here. And then let's see what they have here. Else Nutrition Holdings. They do baby formula based on fermentation and cellular agriculture techniques. And Meatech 3D from Israel. They are 3D printing steaks. So these are two very, very interesting synthetic biology companies, and actually the only publicly tradable companies from the synthetic biology field. All the other companies are still private, pretty much, and you can only buy them through other vehicles like Agronomics, for example. But this is awesome. Basically, they have exposure to all these pure food-based companies from the cellular agriculture field here with Else Nutrition and Meatech 3D. Nice to see. Small allocations though, but this might increase in the future. The other ones we had Ginkgo Bioworks here. They do amazing work on flavors and so on based on fermentation. So meat flavors, that is. And Amyris as well. They work with precision fermentation as well. Also a seller company, more in the B2B space or exclusively in the B2B space actually. Here they present some of the companies in their fund in more detail, which is nice. So here Beyond Meat, you probably all know. They have a market cap of almost $2.5 billion. And what they write here is interesting. They are active in over 80 countries by now, expanding rapidly internationally. And they have extensive brand name recognition, which is true and very important. Because if you think about plant-based burgers, in many states and many situations, you think about the Beyond Meat burger. and partnerships with global companies including McDonald's, Kentucky Fried Chicken, Subway, Carl's Jr., Panda Express, Pizza Hut, PepsiCo, and so on. So this is very nice. Beyond Meat is a household name, very famous company from the plant-based space. So you can't really go wrong with that, I would say. Oatly is pretty similar. They are very famous as well for their oat milk. Fast-growing plant-based beverage company, 52% revenue growth. That is awesome. And you can see here they produced an additional 450 million liters per year in China. Now here we go. Exposure to synthetic biology. Actually, I kind of like the name synthetic biology. It's nice and definitely easier to say than cellular agriculture. Anyway, let's see here what they write about their holdings from the cellular agriculture or synthetic biology field. The industry of creating protein from microorganisms will grow from under $1 billion in 2020 to $66 billion, and making proteins from cells will grow from under $1 billion to $18 billion by 2035, according to the Boston Consulting Group. This is okay numbers, but I think they are much too conservative. There's much more growth in this sector than portrayed in these numbers here. First up, they have Amyris here, Amyris Incorporated, with a market cap of $1.2 billion, so not too large. They have an exceptional 97% yearly revenue growth. That is really very high. That is exceptionally good. Their lab-to-market platform converts plant-based sugars into valuable molecules found in nature. A big seller is squalene, an animal fat found in shark livers and used as moisturizer or hair treatment. So this is awesome. They help not killing sharks just for their fat. And what I find particularly nice is that they hold over 50 patents, which means they do a lot of R&D, research and development, and can actually protect their intellectual property, which is important as an investor because they want to earn money from these patents. Another company from the synthetic biology field here is Ginkgo Bioworks Holdings. We've talked about them before, and they have a market cap of $5.5 billion almost, and they're a very interesting company. Ginkgo has a stellar 309% yearly revenue growth. That is just insane. In partnership with Motive Foodworks, they use fermentation to create the savory flavors and aroma of meat without the animal. With Join Bio, they enable microbes to produce nitrogen in the roots of non-legume crops. Now this is really, really interesting, because it says here they cannot produce nitrogen themselves, which could dramatically decrease agriculture's dependency on fossil fuel fertilizers and its impact on the environment. That is very important because nitrogen-based fertilizers are the backbone of our entire agricultural system. Without these synthetic fertilizers, we would not be able to produce even half of the food that we currently produce and need. So weaning off the people and basically humanity from these nitrogen-based fertilizers, or at least from the dependency on fossil fuel-based fertilizers, is a massive, massive advantage. And this is a really cool project that I would really like to see succeed. So there definitely is some exposure to the cellular agriculture field, specifically through Agronomics, of course, which is a really pure play on this cellular agriculture field. And then you have Else Nutrition and Meatech 3D, the direct consumer product companies, which produce baby formula and steaks, 3D printed steaks. And then with Ginkgo Bioworks and Amyris, you have two awesome B2B companies, also from the cellular agriculture field. So the total allocation is maybe here almost 1% from Amyris, 1% from Ginkgo, so we're at 2. Then you have 1.2 and 1.3 for Else Nutrition and Meatech. So let's say we have 4.5% maybe, and Agronomics up here, let's say 2. So in total, you have maybe 6% of the EATv ETF allocated to cellular agriculture companies. That's why I said earlier that it's not the right choice for you if you want exposure to this synthetic biology sector in particular. Then you should rather go with Agronomics directly or something like Cult Food Science, for example. Those are really pure play cellular agriculture companies and investment vehicles. In an interesting webinar just yesterday, I actually asked the CEO of VegTech Invest, Elizabeth Alfano, if she plans on increasing the allocation to synthetic biology companies if more of them become available or publicly traded. And she said definitely yes. So in the future, we might see more investment in cellular agriculture companies in the EATv ETF compared to just now, where there are really just not that many publicly traded companies from that sector. So that was it about the VegTech ETF overview. What do you think of the fund? Would you invest? Would you buy it? Are you interested in the plant-based innovation or more in the cellular agriculture specifically? Now, my personal opinion on the fund is, well, it's okay. It's probably nice if you want exposure to the plant-based sector much more. There's not all the companies in there that I would like to see in there. And then the pure play food is not really true because you have things like Tesla in there and so on. So yeah, it's a little bit all over the place maybe. I would prefer a more cellular agriculture based ETF, but then again, you can't really set that up yet because there are not that many publicly traded companies from that sector. So from my personal opinion, I would say if you want exposure to cellular agriculture, stick to your agronomics or your cult food science maybe. If you're interested in that sector, this ETF is not it. This is based on plant-based food and beverages mostly, and then there's some exposure to the synthetic biology part. Although Elizabeth Alfano, the CEO, told me in a webinar that she wants to increase the allocation to cellular agriculture once more companies become available. So we can keep an eye out for that in the future. Until then, there's probably a lot going on in the cellular agriculture field, so I will see you in the next one.